Hi guys, welcome back. This is gonna be the video summary of episode 11 of the ICT Mentorship 2022. As always, remember, refer to ICT original content. This is just a summary, a reminder of everything that ICT explains in this episode. So let's get started. In this episode, we are gonna go through the opening time for the power of 3, swing highs and lows, and an example of ICT trading. I received so many comments from you guys and so many of you asking me what is the right opening time for the power of 3. Should we look at 8:30 in the morning or should we look at midnight? I also received some comments from chartered students and I want to say to all of you guys, thank you. It was awesome to receive all of your feedback and all of your thoughts about it. Thankfully, in episode 11, ICT answers to our question and he tells us that we have 2 reference points and we need to deal with them both. If we are looking at the entire daily range, then we should be looking at midnight as our opening price. If instead we are looking at the morning session only and we are focusing on that, then we should be looking at 8:30 in the morning. I'm sure that more will come in the next episodes and we're gonna see concrete examples of when to use midnight and when to use 8:30 in the morning. And now let's look into the Nasdaq E-mini futures at the 1-day time frame and let's look at the contract that has actually expired in March 2022. As you know, ICT was recording these episodes live and starting from January onwards, and now we just passed mid-February. Let's remind ourselves. More or less from the 24th of January, as we can see on the right side of the chart, if we apply the Fibonacci retracement, we can see the equilibrium point. And around the equilibrium point, we can see the 13th, 14th of February, a big, fat fair value gap, in which the price has retraced back into. We have seen this already in episode 9 and in episode 10, so we can switch to the 1-hour time frame. And on the 1-hour time frame, we can see in red, in those red lines, the high end of the fair value gap and the low end of the fair value gap that we have seen on the previous chart. Let me zoom in for us. And we can see that ICT tells us that he traded on the 21st and on the 22nd of February, and he had put a short position in. We can notice the gap in price. And here ICT tells us that he had believed, when we see that gap, that the price will actually keep going down, and that's actually what happened. And now let's switch to the 15 minutes time frame. Remember, we are focusing here on the 21st and the 22nd of February 2022. ICT tells us that he entered his position here to go short. But the big question is, why did he do so? Honestly, when I was looking at this episode, I stopped a moment because he asked that question like, I entered a position here, but can you say why? I stopped the video and tried to do it on my own to try to understand why ICT has entered a position there, and to me it was not so obvious right away. So if you feel like try to do the same, stop the video here a moment and ask yourself, would you be entering there? Yes or no, and why? And when you're ready to keep going, let's go to the next one. So from the 15 minutes time frame, ICT switches to the 5 minutes time frame to explain us better why he entered there. On the 5 minutes time frame, we see here that we have this rally up of the price, which for ICT at first sight looked like a Judas swing, because the price is going in the opposite direction of what we are expecting. Remember, we are expecting the market and the price to go down, so we are not bullish, we are bearish for that day. It would make sense that this is a Judas swing because Judas swings are made to lure in retail traders and to make them think that the price is gonna go up, that the price is gonna be bullish. And that's the moment when they enter the market, and then the market goes exactly in the opposite direction. Always on the 5 minutes time frame, we have here in green an old daily low, which is something that we can believe at 8:30 in the morning if we are bearish that the price will be targeting to. Because underneath this old daily low, we actually have liquidity. 8:30 in the morning, the price rallies up, and then the interesting part. We see here an imbalance forming. Let me zoom in so we are still on the 5 minutes time frame, Nasdaq E-mini futures. This is the 20th, 21st and 22nd of February 2022. What do we see on the 5 minutes time frame when we zoom in? We clearly see the fair value gap, and I'm gonna highlight it here in green, and we see the price tapping back into it. I'm gonna try to be precise here, guys, because also ICT is quite precise here, and put some red dotted lines to show you the upper and the lower boundary of our fair value gap. Because of volatility, the price can go a tiny bit outside of the lines. ICT tells us that small swings when the price is really volatile can happen. The most important thing is that the majority of the body of the candle that is going a little bit above or below that fair value gap is still supporting the idea of the fair value gap itself. And so if the wicks go a little bit out of it, that's okay. Let me zoom out for us. So this was the whole day. We have seen 8:30 in the morning, price coming up and then going down, forming the fair value gap. And we're going to put some red lines here so that we can see it better. And from the 5 minutes time frame, we're going to switch to the 4 minutes time frame. And if you want to see it with even more precision, we're going to go to the 3 minutes time frame. Now, the part that is interesting for us on the 3 minutes time frame is actually this one here in red. So allow me to zoom in again. Here we see two highs surrounded by lower highs, right? So the first high is of course higher than the second high. Let me sign them in red so that you can see them better. ICT starts telling us about swing highs and swing lows, and about the whole concept of highs and lows when we are trading. He tells us that this is quite a nuanced topic and that we really need to look at it in its entirety. It's not enough to see two swing highs or two swing lows and then being sure where the price is gonna go. It's really a compounded story. We're gonna start with a simple explanation. He tells us indeed that yes, we have two highs, which you can see here with red circles, and those two highs are surrounded on each side by two lower highs that you can see in blue. ICT tells us that the second high in red makes an intermediate term high. When we have two highs surrounded by two lower highs, we know that those are swing highs. Swing highs have always two lower highs on each side. Yes, guys, swing highs are cool, but what is this actually telling us? Swing highs, swing lows, and intermediate term highs, exactly as lows, tells us about the market structure and about the fact that the price is attracted by liquidity. This is a bearish market, and they're telling us that the price wants to go lower. So they're telling us something about the market structure. On the other hand, we know, as we have seen from the beginning of this mentorship, that the price is always attracted by liquidity or it is going towards an imbalance. And our draw on liquidity is the green line that we have seen in the lower part of the chart, so it is below where the price is right now. So let me recap. We're looking at this chart with directional bias, meaning we know that the market is bearish, that the price wants to go down. We know, as always, that the price wants to go and take out liquidity, or it is attracted by an imbalance. Now that we know that, we found our imbalances and we are ready to switch for a lower time frame. We look now at the swing highs, and every time we see one, we are asking ourselves, is the price ready to go lower? Why? Why not? Why is that the case? Why is that not the case right now? He gives us an example of his trading in the past. He says that to understand really much better the highs and the lows and the swing highs and the swing lows and how they play into the structure of the price movements, in the past he would look at and assign his graph with one circle when he had a short-term high, two circles when he had an intermediate term high, and three circles when he had a long-term swing high. Please notice this is just an example applied to this graph. I'm not saying that these are actually long-term or intermediate or short-term swing highs. So it is just an example. It is indeed about understanding the nesting effects of the highs and the lows, considering their levels and how they play into the whole story that the price is trying to tell us. Now, for real, back to our example. Let me zoom out, and here you see the 3 minutes time frame of the Nasdaq E-mini futures, and what we want to see now is displacement. We want to see a big energetic move, and we get it here in green with this beautiful fair value gap. ICT tells us that we could be entering in these 2 points where you see the vertical arrows. Again, guys, why? Let's recap it from the beginning. Here in red, first and foremost, you see a swing high. Now that swing high is broken right after to the upside with a higher high. Now look at this low here in red. This low is actually taken out here in the red circle. Then we have a fair value gap forming. And right after the fair value gap, we have this candle in red. If the price touches this candle and goes higher than this wick, than this candle over here, then we can be confident that the price is ready to go down. By using the fair value gap, we should enter our position here. And indeed, ICT tells us that he entered the position exactly here, where you see the red vertical arrow. Something interesting. ICT is actually not waiting for the price to go below this low, which you can see here with a dotted orange line. ICT is brave but also clever. Why? Because he has all the confirmations necessary with the swing highs, the swing lows, the break-in market structure and the fair value gap, with a confirmation of his already existing bias that this is going to be the movement of the market. After ICT enters that position, the price actually starts going lower. Where you see the very long red arrow is when the market closes at 1 p.m. New York local time. That's because there is, if I have understood correctly, a non-working day, so the markets are closed. But the price did not go yet below the green line. The low did not get yet touched or violated. ICT believes that the price will go down and he keeps holding the position. Indeed, when the market reopens, the price comes down and it really smashes it, and there is even a gap. ICT tells us as soon as that happens to take our profits, exit the trade, because it's very likely that the price will come back up, retouch and close that gap. And this was a beautiful example of ICT trading, ICT entries, market structure, swing highs, swing lows, and how everything plays together. Now, ICT tells us that we should know which type of trader we want to be. Depending on our personality, every one of us has its own tendencies. For example, are you a patient person? Can you wait for hours for your position to close? Or are you impatient? Do you need to get everything done, close it and get out of there? Know who you are and work your strengths and puzzle them together with the appropriate time frames and the strategy that you are using. Backtest, backtest, backtest. After that, ICT gives us an example of his own live trading, and if you feel like going through it again, you can find it at around minute 26 of episode 11. You can find the PDF of this episode in the description below, and as always, keep going, do not give up, this is the way. I'm so excited for the next episode, and I received so many comments of you telling me episode 12 is crazy good, and I'm really looking forward to summarize that next and publish it super soon. Guys, let's go, let's do this. I am a Stoic at heart, and as Marcus Aurelius used to say, external things are not the problem. It's your assessment of them, your thoughts, your judgment about external things. And you can erase that assessment right now.